I'm going to hit on a name today for some unusual activity for you. StitchFix. It's not a name that we bring up very often, but we do see this fairly often hitting on our systems. And as a matter of fact, we've had 3 hits in the last week in StitchFix. Now, these options are in the money, which is something a little bit unusual. So we talk about unusual activity. That's a little bit unusual. In the money calls, they're the 19 strike calls that expire in 2 days. Keep track of that, 2 days. These could be also a little bit toxic. So I'm going to move to something else. StitchFix. This is a name that we've had hit on multiple occasions in the past, and it seems like they've been oftentimes more right than wrong. So that's
Real, Revolve, Farfetch, and StitchFix. And I think those innovators did an incredible job pre-pandemic at establishing loyalty with the customer. I think they've done an incredible job during the pandemic. And I think they will emerge, emerge on the other side of this as
stock up here, number 1 of 3 is a company named StitchFix. Ticker symbol SFIX on this one, okay? This is my first stock of these 3 that I'm planning on buying in the month of October 2020, okay? Market cap on this one, under $3 billion. It is a major growth company even now, but I think in future years, it will definitely be. StitchFix is a website/app where essentially you can get clothes sent to you that are styled specifically for you. So you go ahead and put in a bunch of your data on what type of clothes you like, what size you are, all those sorts of things. And then essentially StitchFix has a stylist which will go ahead and pick out those clothes. Those clothes will be sent to you, and you get to pick out which ones you want to keep in that box, which ones you want to take back, and basically you get a discount for the more clothes you buy that were actually in that box. It has to be an attractive business model. The amazing thing about StitchFix's business models, I think they're the first company really in the apparel space to make artificial intelligence a serious thing with their business model, because they're taking in so much data, and that data can basically tell you intelligence on a very high level, and StitchFix is right there with these guys. At least it's just not a big company like those are yet, right? But in terms of using artificial intelligence to actually have the business model perform very well, StitchFix is doing that. I think that makes it a magical business model. They're looking at all this different data, right? The client data, the merchandise data, the feedback data you give. So if you don't like something, you can explain like why you don't like it. And the more feedback you give StitchFix, the better off you're going to be as a customer of StitchFix essentially. And so through the artificial intelligence program, it can actually give you like a percentage that this person will actually like this item. Like there's a 63% probability they will like this dress or this coat or something like that. That are, I mean, YouTube, Amazon, Pandora, and then if you get in with StitchFix and you start using this regularly, their artificial intelligence is so powerful, they're going to continue to send you clothing items that you actually like, okay? Strategically investing in long-term growth and brand building, capital efficient business model with and yeah, that decision really made me just love StitchFix more than ever. So I definitely love that stock. It's definitely a stock I'm interested in buying more and more of this month. It's a stock I just started buying very recently, and I can continue to add to that one for hopefully weeks, if not months, to go into the future. All right. Is in the apparel industry, Revolve and StitchFix, okay? Both of these stocks, I believe, are jackpot stocks in the making, okay? Keep in mind, let's start out here, okay? Apparel sales could be down around 50% this year. Like the worst year for apparel sales in history. Absolutely extraordinary, okay? Look at StitchFix. It's maybe even more pronounced, okay? Look at StitchFix. Revenue just increased 11% in their latest quarter year over year. And so Revolve and StitchFix are most people don't just want basics, okay? Most people want more advanced stuff. Revolve, StitchFix, and those type of players are going to be the game changers, okay? So I feel she finished green today. I was fortunate, StitchFix being one of them. But StitchFix, what are they? Why is that stock up here today? Well, it's an online shopping company, right? And so if you think about the mall environment and you know, let's imagine Roni gets much worse, might definitely be some fears about people going out, okay? Opportunity opening up in switch stock. You look at StitchFix, look at this one, okay? This one's amazing. I mean, just strong. The stock was one of the strongest stocks in the stock market right now. Let me be very clear about this. Literally one of the strongest stocks in the market. Absolutely incredible StitchFix is. I mean, just extraordinary. Look at the stock chart here for StitchFix over the last few days. As the Dow has dropped almost 2,000 points in the last 4 trading days, what has StitchFix done other than go up and up and up? That stock is remarkable. There's something going on underlying with StitchFix that I think Wall Street's catching on to. And maybe there's actually been a pretty big change in Stitch Fix's business model, kind of on the DL over the last few months around algorithms and kind of, basically showing you some items on the website that you'll probably like without having to ship them to your house and things like that. I just feel like there's something big happening at Stitch Fix, and Wall Street's catching on to this. One is interesting. Elf on a Shelf was down 3% here today, a company that benefits massively, basically when we're in a downtrending market. Look at StitchFix here today, down almost 10%, okay? On no news for StitchFix, it's just the stock was down huge, okay? Stuff, okay? I see StitchFix as being one of those companies. I see the Real. I see another stock I own, RVLV, Revolve, okay, as being one of those stocks, and Farfetch. I feel like
and you know what you got to pay attention to? StitchFix. Why? Because shares are exploding to the upside. Not only do they have better than expected revenue, better than expected profits, but they've hired somebody from Amazon. That's the magic thing you hear. Yeah, that's right, StitchFix. Tesla, they're going to be issuing $5 billion, basically doing a raise through share offering. Shares are down about 1.3%. Goldman.
Should have green tomorrow.
StitchFix, as you see, the shares continue to plunge after hours on the earnings report. The shareholder letter has now been posted on the website, which just gives us a little bit more information than what we got from that initial press release about what happened in the quarter. And the company is basically
those names ahead. And we're all over this after hours move, and StitchFix, the stock is plunging on earnings. We'll break down the details when Fast Money returns.
You know that tech stock we talked about?
So, she's back.
I don't think of myself that way. I think of myself.
Talking about with earnings here. 1 second.
Fix. Earnings per share slightly.
StitchFix. StitchFix. Wow, down 16%. Oh my God. Hold on. Let's listen to this for a second.
Light at 504 million. The street was looking for 512 million. The adjusted EBITDA is worse than expected, as is the revenue per active client. That is light. You can see shares down here 16% after
fear easing. StitchFix plunges. Florida cuts vaccine age to 60. They should just let anybody get it. I mean, I don't know. Maybe then the lines would be too long, but just open up some stadiums and let anybody get it who wants to stay in line. No, maybe I'm oversimplifying. StitchFix. StitchFix got oh my God, StitchFix. I don't have Stitch, but yeah, Shift reported they did very well. I'll do a breakdown at some point. YOLO update. Oh my God, dude, deep value. That's so amazing. Let's look. Reddit. Wall Street bets. Let's go. Wall Street. Okay, what else do we have? StitchFix. StitchFix down 24%. Unbelievable. Let's look at top. Let's go. Yeah, and look, your FOMO. Where was your FOMO on Thursday and Friday when we were in the gutter?
Stands out and you outperform. Another executive shakeup, StitchFix, a name that you guys like. We saw Katrina Lake moving to the executive chairman role there. How do you think about that company at its point here? Stocks obviously had a wild run for all kinds of meme-related reasons, really. But how do you think about the fundamental setup for StitchFix?
So, you're right that we just recently had the CEO step down after we made it one of our second SMID cap top buy. Wix is our number one buy. Then then StitchFix. And, I don't like to see Bezos was in place for 26 years or something like that. He was going to move on at some point. That was kind of quick, although Katrina's built the company and ran it for 10 years. That's a long period of time. We've had a lot of management turnover at StitchFix, so at the margin, that does make us less constructive in a short period of time. I'm not sure I would have made it our number 2 pick if I'd known we were going to have a CEO transition. That said, I think this is a company that should benefit from us coming out of COVID. There will be a reacceleration in the fashion and apparel spend. StitchFix should benefit from that. And I think they've got some really nice product innovations that are going on now. They're going from kind of a subscription model where you would get a fix of clothing, 5 pieces every, kind of like regular retail. You can go to Stitch Fix and buy one item, or they send you very personalized recommendations. And I think as a bull on the stock, one of the reasons I'm a bull on the stock is I think they are doing a better job with data science than most other apparel retailers, and they can personalize that shopping. Each active customer will become more and more engaged with Stitch Fix and spend more. So that's kind of the thesis on Stitch Fix. I think valuation here is very reasonable. This is a dislocated stock. It's traded off 40% because they missed on the January quarter, and now you got the CEO stepping down. So
CEO of GameStop, no longer CEO over at Stitch Fix. Got that news last week.
I'll push back.
She's still on the board though.
Katrina Leck, yes, she's going to be the executive chairman. I'll toss another curveball to you, Miles.
Big outperformers to the upside is actually Stitch Fix. It is higher by about 15% in early hours after results after the bell yesterday. It's a forecast really the key. It beat expectations. You also had Marvel Technologies reporting after the bell yesterday. It is higher.
Investors, you flip up the board. Some of the other movers on the day, Stitch Fix came out with earnings last night. It's all about those accessories. Accessories selling well on that site. Those shares having a phenomenal morning right now, up about 14%. And you also got Clover Health. This is interesting. We talk a lot about the meme stocks here, Tom. The meme stocks like
60 seconds you need to know before you go. John Najarian here. Stitch Fix. Wow, look at this one, folks. Up almost 15% in the pre, coming in way above estimates and offering 20% growth in active client base. Wow, that's incredible. Looking around, Coupa Software, COUP, earnings 7 cents a share versus a 19-cent loss.
Investors, you flip up the board. Some of the other movers on the day, Stitch Fix came out with earnings last night. It's all about those accessories. Accessories selling well on that site. Those shares having a phenomenal morning right now, up about 14%. And you also
Wilder. The original. Yeah, I know. All right. So Netflix up 3%. Stitch Fix. I wanted to hear more about Caroline and where she's getting her clothes because I find that fascinating. Rallying big time. We broke the earnings down after the close yesterday. That stock up 15.
Stitch Fix. This is where they just send you a box of clothes.
Yeah, I guess. I don't know. Do you use this one, Caroline?
They style you.
Very stylized version, though. Yeah. I don't use.
In the pre-market, missed earnings expectations. Stitch Fix surging better than 12%. Higher in early morning trade after a surprise profit. How about that?
Some big moves in smaller cap internet stocks this week, including recent IPOs, Duolingo and Warby Parker. Joining us now, Mark Mahaney, Evercore's head of internet research and author of Nothing But Net, 10 timeless stock picking lessons from one of Wall Street's top tech analysts. Mark, great to have you with us as always, and good to dive in today on some of your top smaller picks. And let's start with Stitch Fix.
Okay. Yeah, it's nice to get beyond, thanks for the plug on the book, by the way, but it's nice to get beyond all of the mega cap names. And there's a series of these mid small cap names, market caps less than 5 billion, less than 10 billion. I think there's some interesting names in there. Stitch Fix is at the top of our list. Now, this stock has traded down aggressively year to date. There's an enormous amount of skepticism on the name, and maybe for good reasons. That all said, we think it's a good business model. It's trading at roughly 1 times EV, 1 times sales. And we think they've got a nice product development catalyst in that they've rolled out more and more what's called direct buy functionality, or the ability to really kind of do on-demand shopping with Stitch Fix as opposed to just their core subscription business. That's why we like the story.
And your price target and the upside?
$68, so that's almost a double from where we are today. That sounds super aggressive, but I look at these names, especially when you get into small cap names. You can see really very quick re-ratings and de-ratings too, but you can see a lot more volatility in small cap names. So they're small cap usually for a reason. The market cap, the market opportunities aren't as big, management teams aren't as well tested, but that oftentimes means that there can be great opportunities, a lot of risk, but great opportunities in those names.
We want to get to some others, but first on StitchFix, because we do have Elizabeth Spaulding on this show all the time. Why do you think there is so much skepticism around this stock and this story? Is it just that market has trouble with subscription services?
I think there's a question. They have about 4 million active customers, and the question is, do they only have 4 million active customers in the future? So there's a debate about just how extensible, if you will, the value proposition is. Look, I generally prefer founder-led companies, and the founder CEO step down, so that's always a negative. That's almost always a negative tell for companies. We have had a lot of management change here. And then third, there is kind of broad competition when it comes to purchasing apparel online. There's a lot of different ways to do it. The real question is this mass market? Is this too niche of a service? I think that's really, it gets to the question of how sustainable is the growth rate. And for about 2 years there, you had deceleration in the number of new customers coming in, and the bears jumped on that, maybe correctly, saying that tells you just how limited the TAM is. Until you get real acceleration, sustained acceleration, the TAM's limited. But if that changes, there's a lot of
tech related, but in different areas. C3 AI, Chegg, Peloton, Zillow, StitchFix, all down more than 70% off their 50 stocks of growth names like Chegg, StitchFix, Zoom, C3 AI. I mean, we talk about kind of moderate dips in some tech names that maybe you want to buy, but then some of these names have had dramatic, you can't even just call them dips, they're plunges.
Managers, I like that. Funny managers have decided to see if StitchFix should get a stay of execution because, in a lot of ways, it's more of an apparel play than a tech play. I've always liked this one, but its stock has been obliterated. Get this. It's fallen from 113 in its short squeeze-induced peak down to 23 today. Again, we're looking for...
There's always something to do. I mean, we're short Rivian, Peloton, StitchFix, and so you can take advantage of speculative markets as well. You don't have to be prey to them.
In early hours. Plunging to the downside, though, is StitchFix. Of course, this is the subscription company, sends you personalized clothing and fashion choices in the mail. It gave a forecast for revenue that was below the lowest analyst estimate. A number of analyst downgrades off the back of that, and that stock down hard in early hours by about 24%. And one other stock
at this day, 5 minutes ago, take a look at shares of StitchFix. We were up as much as 7% earlier, now about 5% on the day. We're going to get earnings from them after the bell. Analysts are looking at a loss of 12 cents, all on revenue of about $571 million. That is for the last quarter that we just came through. But it's interesting that this
show they beat by about $1 on the bottom line. StitchFix, though, did they ever miss? And their membership.
All right, welcome back. Final trade time. Pete, why don't you kick it off?
Sure. As yesterday we had two monster buyers in Apple. I think it's going higher. We even saw buyers all the way up to 205. Apple.
Kevin.
Coinbase, global infrastructure, internet, and crypto, all in one package for 2022.
Rob.
Green Thumb Industries, they're the Tiffany of cannabis.
Oh, new name there. And Amy?
Okay, super contrarian, but I'm going to go with StitchFix. The stock's down from over 100 to less than 20. $2 billion market cap now.
Okay.
They've had execution issues, but I think there's long-term value there.
The last piece of the puzzle together, throw in RealReal. RealReal, StitchFix, and I think Revolve could be kind of a match made in heaven if all three of those companies combine. But at the least, Revolve and StitchFix, because both those companies sell new items. The data both those companies could provide to each other would be immense. And I think that more as a risk-on type place. Teladoc up almost 6% here today. StitchFix, which is a small cap company, up 5.7% here today. The smaller market cap seems like the harder it got hit. StitchFix, another 52-week low, down 3% plus on that one. Celsius Holdings, that one down 3% today. Amazon down 3% today. We already spoke about Amazon. That's a big move for Amazon. Other stocks on my watch list, right? Nordstrom up almost 13% here today. StitchFix up 11% here today. The reversal in StitchFix, I should have pulled that one up. Oh my gosh, okay. Bear markets left and right. Of course, there's in a polar bear market. Stitch Fix is as well. Avant Brands is. SoFi is in a polar bear market. Beyond Meat's in an Antarctica market. I mean, these stocks have just been devastated, absolutely devastated, okay? I have to say, and this is after a really strong day on Friday, right? Look at Stitch Fix here today, 9.5% up. Voyager Digital, 8.5% up. Honest, 8.5% up. Robinhood.
Bed Bath & Beyond and Gap, all of them up over the past 3 months. Stitch Fix, the trendy ones, ThreadUp, Rent the Runway down. What do you think here? How do you take those apart?
Again, Tyler, I think we're seeing some multiple compression. The sexy ones have good business models.
That's going to be a show to watch. Stitch Fix, this is one of the more volatile stocks you can watch in the market. Look at its 52-week high. Look at its 52-week low. This 52-week high on the stock's, I think, $100-something a share. It's 14 here today. This is a stock that routinely makes a 20% plus move on earnings. So before, maybe the Uber shareholders had the news before everybody else did. Stitch Fix, as soon as that news broke with the Fed, tattooed chef, even TTCF. Imagine selling TTCF or buying TTCF based upon what the Fed's going to do. That's just comical, okay? But the business model has always been pretty darn compelling. They've had a pretty sticky customer base over time. It's a recurring revenue stream business model, and this stock is now back to where it went public at years ago. Right? We're all going to need to be drinking soon. Stitch Fix, 12 for Stitch Fix? My gosh. Okay. Wow. And eventually they'll be respected, right, in this market. Stitch Fix, not my favorite company in the world, but I got to say I like Stitch Fix, and it's another one that's hard for me not to see them making money, especially when you take into account the world truly opening back up now. This stock's got beaten down too far, in my opinion. I can understand it getting beaten down to $20 or so, but $11 is pushing it. That's pushing it for Stitch Fix. I've tried out their product. I like their service. I think this one's a nice opportunity here at $11.
More to go and a lot of upside from here. Stitch Fix is another name that we're looking at. It hit a 52-week low or all-time low yesterday. It's down over 80%. We think it has a defensible franchise. We like the way that it knows its customers. We think it's making a lot of good moves. Again, $1.3 billion market cap. So those are
shape up much better for them. Oatly's just an expansion beast. It's ridiculous. Stitch Fix is in no man's land right now. Meta's kind of in no man's land right now. Booberty Booba stock is under $30 now. Stitch Fix has hit a 10. That's incredible. I mean, incredible. For Stitch Fix to hit a 10 is just ridiculous. That's all.
Maybe romance is dead? Then there's Stitch Fix, the online apparel play with a stock that's plunged from $75 less than a year ago to $11 today. Remember, apparel bad. All of these names live in the heart of the bear market we're experiencing. So Tuesday night will be a great test to see if any of them have fallen far enough to mark a bottom. Anything's possible. Maybe romance is dead? Then there's Stitch Fix, the online apparel play with a stock that's plunged from $75 less than a year ago to $11 today. Remember, apparel bad. All of these names live in the heart of the bear market we're experiencing. So Tuesday night will be a great test to see if any of them have fallen far enough to mark a bottom. Anything's possible.
Affected somebody like Shopify, not really so much. Stitch Fix, a little bit, definitely a little bit, but Stitch Fix is a company that's been flirting with profitability than non-profitability. So, it's another one of those that if you're thinking about, because when you're thinking about oil prices going up a bunch, right? Gas prices going up.
To see the Fed screw up the markets. By the way, Stitch Fix just fell in the after hours. It's down about 19% in after hours on missed forecast.
Thank you very much. Great to get your thoughts today. Priya Mishra.
Thank you.
Coming up, Energy Secretary Jennifer Granholm joins us following America's ban of energy imports from Russia.
Now, okay, so let's see here.
50+% in the past.
Video conferencing or in e-commerce. I mean, we saw what Stitch Fix had to say last night, where these names are getting crushed because they were up a lot based on the pandemic and people staying at home and Zooming and, sitting on their Peloton bikes and streaming things on Netflix. But each one of these is a little different. And so I think you have to go through them one by one. But yes.
That's all I'll say about that. It has to play out. So StitchFix, I thought this was very, very interesting stuff.
Surge in dress buying. But with 80% of StitchFix shoppers heading back to the office wearing business comfort, there is another benefit.
My dry cleaning bills are very minimal now.
StitchFix says men are also looking for performance pants to wear to work, like hiking or golf pants that transition easily to the weekend, and Noven shirts, that's a knit plus a woven material. Chef.
Than fear quarter. Finally, there's fashion. StitchFix from 66 to 8. Rent the Runway from 19 to 4. Poshmark 51 to 10. Ignominious Real 22 to 3. Allbirds 29 to 5. Warby Parker 60 to 16. So what distinguishes these companies, aside from their disastrous performance and the fact that almost all of them lose money? Simple. These stocks are where sign. They reported for close Thursday. See what they tell us. I think StitchFix can be regarded as a COVID stock too. Good and okay at StitchFix, but it doesn't matter. They're running in place. They're going nowhere. Really painful. Hey, we know that high-end retailers are worried, as we found out from Gary Friedman last night on his RH call. Gary's really just, he's perturbed, thinks there's going to be a slowdown. He's cutting
movers on my watch list, my Hungry Bull watch list. StitchFix, big downward day. Voyager, big downward day. Which
to miss with DocuSign CEO tomorrow on Tech Check. Next up, StitchFix. Shares are down 55% this year as the subscriber growth slows and the path to profitability still isn't clear for that company. CNBC.com retail reporter Lauren Thomas has the story on this here. Lauren, can StitchFix get things going in the right direction?
Yeah, Dom, that's the big question, right? This company has certainly been pressured, not just this year, but for a number of months now. Shares down about 55% year to date, like you said. If you do recall, last quarter, StitchFix cut its revenue outlook for this fiscal year. It also totally withdrew its earnings guidance, saying that there were a number of things that it needed to reevaluate, really its cost structures. So that includes marketing expenses, supply chain expenses, which are certainly weighing on a number of companies right now. The big thing that StitchFix really has to figure out, under CEO Elizabeth Spaulding, the company rolled out this new direct buy option. It's called Freestyle. And essentially last quarter, what the company told us is that rollout didn't go as smooth as planned. The company didn't onboard as many customers as it anticipated. So we're really looking for improvement there this quarter. The one other thing I'll mention is last quarter, StitchFix was facing supply chain delays anywhere between 4 to 5 weeks. So we're certainly looking for that timeline to decelerate some as well. All right, Lauren, let's turn now to Nancy. As an investor, how important is profitability in this kind of an environment where Thomas, thank you very much for the story on StitchFix. Finally, we're going to turn to what's happening now with Vail Resorts. Those shares are down 20% on the year as macro headwinds persist. While folks are eager to travel post-pandemic, we know this, consumers are also dealing with surging inflation, sky-high fuel costs to get anywhere right now, road trip or otherwise. However,
reporting this afternoon that the company is laying off 15% of its salaried workers. Lauren joins us now. Lauren, were these layoffs inevitable given the pressure on margins and the stock price that we have seen over the last, year or so?
Yeah, absolutely, Sarah. StitchFix is a company that has certainly been under pretty substantial pressure for a period of time now. I believe shares are down about more than 55% year to date, last I checked at this point. And just 3 months ago, StitchFix cut its revenue outlook for fiscal 2022. And it also entirely withdrew its outlook for earnings guidance. And at the time, the company said that it was really going to have to reevaluate its cost structure, how much money, for example, it was spending on marketing, because it just wasn't bringing in the active customer count that it had anticipated. And again, StitchFix was really appealing to a lot of us, maybe when we were going to the office or, looking for more formal outfits to wear. Certainly during the pandemic, it had to pivot its business a bit. But again, to go back impacted the headlines this afternoon. CEO Elizabeth Spaulding did send out a memo to employees announcing these layoffs. 15% of salaried positions, like you said, that represents about 4% of the company's total workforce, because it does have a number of employees that are paid on an hourly basis. In this memo, Spaulding really described that Stitch Fix is in the midst of a transformation. And she said, while some decisions can be difficult to make, such as this one, it's really going to hopefully set Stitch Fix better for profitable growth over the long term. Because again, the company does report its second quarter results after the bell in less than an hour, right? And it's expected to post
stocks out there, namely two of them, DocuSign and Stitch Fix. These two plunged 24% and 18% respectively in the wake of some truly awful earnings. Well, it's not surprising to see stocks melt down after they report numbers that we don't like. It's remarkable when you consider how far these two former market darlings have already fallen going into the print. Think about this. DocuSign was down 72% from its last year's high when it reported. Stitch Fix had come down 93% from its peak. They come down so far that you can argue that they were cheap on certain metrics. But as we saw today, they deserve to be even cheaper. You know my mantra for this market. You want companies that make real stuff at a reasonable price. Neither DocuSign nor Stitch Fix fits that profile. Today's lesson is very simple. When your stock doesn't have any dividend support and doesn't have reasonable valuation versus earnings, assuming it even has earnings, there's no floor in this market. If you find yourself asking how low can it go, the answer is almost always lower. Here on Mad Money, we don't care where a stock came from. We only care where it's going to. With both DocuSign and Stitch Fix, many people told me it couldn't possibly get worse. These stocks were already down so much, they just had to bottom. But that's not how it works. These newer stocks, the ones that have coined in the last 3, 4, 5 years, they've been insanely expensive at times before the peak, before November, and maybe
laid off 950 people, or a quarter of its workforce. Stitch Fix just laid off 15% of its salaried workers. It issued weak revenue guidance and says it's going to be seeing weaker consumer demand. No shite. Bird, the scooter company that offers these rental scooters in a bunch of cities around the U.S., just laid off 23% of their staff. 23%. Desktop Metal, a company that
BYND up 14%, Avon up 13%, Stitch Fix up 9.6%, Shopify.
Those companies, Third Love, even Stitch Fix. I mean, they had a good run too, right? But it wasn't driven by profitability in most of those cases, probably all of those cases. It was driven by the fact they could really grow, and money was cheap, and so that all worked. Now we look at it and we go, well, maybe it matters if you make
the internet work better. It lays to waste so many online apparel companies, Stitch Fix, Postmark, and it even damages the case for the trade desks. And then finally, yes, the Googles and Facebooks. The whole online advertising edifice. It also explains the colossal underperformance of Amazon. When I say over-earning, I mean they made a lot of money thanks to the pandemic, and now that things are basically back. My friend Bill Gurley, who I was with recently at a really fabulous CNBC CFO Council meeting in San Francisco, he's talking about how some stocks have gotten too cheap. Well, how about this? He bought 1 million shares. Now, that is not 50,000. That's a mill of a company that he's an insider in, Stitch Fix. Now, Stitch Fix is one of these companies, David, where you get a box that has clothes. I think you obviously are wearing it, judging by some of the things you wear. And it's a kind of a millennial thing, Gen X, Fire Fest thing, Not Fire Fest, that's a joke. But I just think that what we've been looking for is waiting for SPACs and smaller stocks that have come down to start seeing insider buying and mergers, which is why I also thought that this would be a great segue to what you were going to talk about later with IronSource.
Yes, and we will after we get an opening bell.
This is an actual cash outlay by a guy I think we all respect, who is really fabulous. And
Bill
also
Gurley.
very nice.
Bill Gurley.
Really great guy. Greens, which was very positive.
I saw a downgrade of Allbirds
which was
today.
Very positive.
That was really
Rent the Runway, which was very. Stitch Fix, which was very positive. I mean, you read these things and it's like, okay, Orwell, could you calling Orwell? I mean, you need Orwell. These things are all down and out in Paris and London, Manhattan.
Ministry of Truth.
Right?
Yeah.
Let's get that Ministry of Truth.
Let's get that going.
Invest in profit.
Is StitchFix stock big opportunity or just big trouble? After all, it's down about 85% this past year. A big thank you to Dr. Fan, who sponsored this individual company analysis with an unrivaled video production purchase. You too can request a company of your own choosing in the link below. And so looking at StitchFix, to understand what do they do, they're shopping experience. So that means you tell StitchFix about the style, what you're looking for. It's a quick and easy quiz, and then their stylists send you pieces in a box that reflect your style, fit, and price points, plus the expert guidance of using machine learning, artificial intelligence. After you get that initial fix, maybe it's a box of 5 different items, then you side advantage where these brands are eager to work with StitchFix, so that way they can more easily be discovered among clients that might not otherwise ever hear from them. Now, StitchFix is introducing their own brands over time, which should help their own margins. Effectively, hey, we're going to sell you the products that we also own. It's not going to say the StitchFix brand, it'll say another brand, but you'll think, oh wow, this is a cool brand, I like it, but it's probably higher margins for StitchFix. Now, once again, they're talking about how the process, you're facing a changing business model, previously focused just on that fix, getting that box of items I've already mentioned, about how now clients entering through StitchFix.com are directed to schedule a fix. It doesn't have to be a subscription, but it sort of gears that way of like, hey, when do you want this to come? Do you want it to start arriving every month? And so that's immediately after filling out the style profile / quiz. After that, then you get this freestyle shop model. The question is, what did the financials for StitchFix look like? And looking at them, I'd argue, their financials, at least historically, really jumped out. I mean, they had hyper growth from 2015 to 2019. This business grew from $300 million in revenue to $1.6 billion in revenue, and all that time they were profitable. I mean, this is better than most. They didn't know much about StitchFix. SFIX is the ticker. And so this initially is a very favorable data point saying, wow, look at that consistent profitability and that hyper growth they've historically delivered upon. Growth, but unprofitable, but you're tapping into this much bigger market opportunity. And next approach is sort of saying, and we'll talk about that in a second. So I'd argue StitchFix is in this really tough pile of being in a turnaround situation where investors are like, hey, you need to deliver. Otherwise, if you keep cash burning, then it's going to be, folks are going to be thinking about liquidation. Benchmark, he personally bought 1 million shares of StitchFix, a couple $1 million. So some folks are getting bullish about this, saying, hey, lay out a framework of hypothetical valuation framework. But here, let me share some thoughts on why I think this is too hard for me personally. So currently stock price is around $660 a share. That implies around a $700 million market cap. And this, as I already alluded, than potentially the bumpy ride that you're going to see in StitchFix stock. And argue
they're vulnerable to the idea that all the rent the runways and the Stitch Fixes and the reals are fake. And runway here, the Figs, yeah, like Newton, no. Stitch Fix, well, yeah, Allbirds, Warby Parker, Weber, Traeger, Symbol Cook. Yeah, there are too many to name. As for the SPACs, I can't really mention them on air, because this is a family show and I might say something I shouldn't. I expected these stocks to get obliterated at the end of the year, not this fast. It's incredible.
Back brands, right? Adobe, AMC, Dropbox, Dollar General, StitchFix, Peloton, Netflix, Lululemon, Spotify, Tesla, and Ulta. And so if you spend at these companies on your card and you own them in your portfolio, you will get that 10% cash back. But the 10%...
I mean, these stocks just got obliterated here today. StitchFix, over 13%. Asana, which is a pretty interesting stock, 13.5%. Purple down over 10%. Obviously, we talked about SoFi. Teladoc, 8%. Square down huge. I mean, look at this.
Really disrupted the retail space. I mean, you have Katrina Lake. She founded Stitch Fix, bringing personal styling to the masses. Rent the Runway, putting the closet up in the cloud. And then The Real, creating this idea of a circular economy. There are a couple of reasons why we might have more women in that sector, but I think a lot of it comes down to the fact that women saw problems that they...
$100 short-term gain on Stitch Fix. On JP Morgan, I took a $1,300 short-term loss.